Hello guys, this is a trade recap on Euro USD. So I'm going to be walking you through this particular trade which started expanding right on Monday. But as on the monthly time frame, we could see that we have this fair value gap right here. So let me just go straight to the daily time frame so that it won't take us much time. But you have to understand that the overall drawn liquidity on this particular trade was based on this Euro USD fair value gap. So even on the weekly time frame, we had price already trying to expand to that high, this particular high, which was our target at the moment. So coming down to daily time frame, there's one thing I want to emphasize on this particular video, which is what they call the KOD. Alright, it is called the case of debt, okay, which is just simply abbreviated as KOD. Now, what is KOD? The case of debt is simply a price movement or a price movement that happens when price is about to hit its target. All right, let's say for example, this is our drawn liquidity, and then price is trading up to that area. All right, before it hits that area, price will give you the last stop point before it actually taps into that particular key area. So this last stop point is what they call the KOD. All right, and then we'll notice here that before price actually traded into this fair value gap, we had that KOD movement right here. Okay, we see price taking out this low, which made a lot of traders to start expecting more sales on Euro USD and even targeting this candle as their bearish order block. All right, but then at the end of the day, it was just a simple trap that had to make traders to come in and then offer liquidity on the other side of the market. I always ask traders that, okay, if you are the one controlling the market and you want to buy something, how will you make other people willing to sell, right? And this is simply just one of the ways that it's the big guys that make the less informed traders to come in and provide liquidity on the other side. So if everybody is buying, there will be nobody to sell. So which means that price will not be able to move. So hence they have to bring in people to sell by introducing or by making traders see such movements as a reversal. All right, so at this point we had this KOD and this was already Monday, so we noticed that this was the trap movement, and we also had this to support it as our order block. All right, so as of this point we're already trying to get our movements to the upside. So at this point we're going to be going down to the 4-hour time frame to get price to align with the daily time frame. All right, take note of that. Now coming down to the daily time frame, to the 4-hour, we noticed a sharp stop hunt that happened here. Okay, so this was a total soup that happened at this point. Let's put this. So we had this total soup and then price went back up to close above. So closing above this candle already is an other block. All right, it validates it to be another block. If you're confused about this other block, you can look at the lessons that I've made on CRT on this particular channel. A lot of videos are explaining this particular movement. So we already had this confirmation, and this was already Monday testing this other block, right? So which means on the 15 minutes, we're already going to be looking for our entry confirmations as a retest of this particular area here. So let's go down to 15 minutes. All right, so on the 15 minute, we're going straight to where price came back to retest the order block. So this was a retest of this particular order block, and also at this particular area here, we had an SMT with GBP USD. There was an SMT to confirm this with GBP USD, and the moment price taps into this order block, all we needed was a shift in market structure, which we have here, and also this was a breaker for our entry. All right, this also was a good breaker to take your long positions. You always want to also monitor the volume, all right, the volume that is coming in when price hits your key level. With such expansions, most of the time price will not come right back down to this fair value gap. I always tell people that when you are trading, when your system is not one that is based on sniper entries, it's not always the goal to be trying as much as possible to refine an entry that you'll be struggling to put like 5 holes. How many pips? It's just get a decent entry, risk responsibly, and that will be it. So this particular trade gave us up to 19 arrow just on these highs, but going right up to the fair value gap was actually a whole lot of pips, which was about 11 risk to reward ratio. Now, this is not just it, this was just Monday pushing up to this point. And then now on Tuesday, all right, on Tuesday, we had another SMT right here, which made us took another entry. This was another SMT movement on GBP USD and Euro USD. So this was showing that Euro USD is not really willing to move lower. And then we had price. After creating us with this SMT, at this point, we noticed that price started expanding back to the upside, giving us this expansion. And this was our entry from this order block as a retest of this particular order block. So this was the second entry that happened on Tuesday. All right, so you could put your stop loss under this order block, or you maintain it on this swing low. I'll prefer this swing low because sometimes the market can manipulate like that and then still continue moving higher. So at this point, we have taken that entry and then aim for more higher prices. Now, a lot of people as well also targeted this particular order block here and they got stopped out. Why? Well, I will simply just go to the 4-hour and notice why they were stopped out. Okay, now on the 4-hour time frame, you will notice that this was a particular fair value gap that we had on the 4-hour time frame, this area here. So we had a 4-hour fair value gap right here. Okay, and on the 15-minute, the low of the fair value gap, or this fair value gap, printed an order block which was against the higher time frame. This is why you always want to pay attention to your higher time frame. So this was the 4-hour fair value gap, and then price had to tap into it there by causing a turtle soup on the lower time frame. I think I've made a lesson on what turtle soups are and fair value gaps. All right, so a turtle soup is simply just a lower time frame, a higher time frame fair value gap, and a higher time frame fair value gap on a lower time frame is simply just a turtle soup. All right, so price filling a higher time frame fair value gap on the lower time frame, you'll see a turtle soup movement like that. So after price fill this fair value gap, our order block entry was right here. Okay, we would have taken your next buy on this particular area, and then target the monthly fair value gap. So all these trades would have been targeting the monthly fair value gap, even though price came into it and still went right up, kept going up, and so on. So this is just basically the trade recap I wanted to show with you guys. All right, so I don't want this lesson to be long, but I hope you have learned something. If you have more questions, you can leave them on the comment section, and please, you can subscribe so that you will receive more content like this. All right, so thank you guys for watching, and see you on the next video.